Hey, intro. Good morning. Good morning, everyone. I hope that, good morning, good afternoon, good evening, depending when you're watching this. Glad to have you back. Happy to share the good news, right? Talk about real estate, talk about how's things in the market and how and where are we going. That's always good information to know, and I'm always happy to share. Now, remember, my friends, that this is a live show. So if you have any questions, if you have any topics that you would like me to cover in the future, um, I'll be more than happy to answer those questions and even cover whatever you have in mind, because I know that we all are going through some sort of real estate transaction, or considering, or don't even know how to get started. And don't be afraid. Don't be afraid of asking, because the main purpose of this channel is to educate all of us, because we don't know it all. um, well, let's start off with, what are you drinking? Today I am having some chocolate. Wait, I don't want to burn myself. Having some chocolate today. It's not chilly. It's not cold. Nothing, but it's getting there, right? I'm off in Houston, so that morning chills are coming in, and so that's why, if I don't have my water, and I have my chocolate. But how do you start the morning? Let me know in the comments. I'll be more than happy to hear what you got. But let's start off with the market, right? How's that doing? How did it go in October? And yeah, let's check it out. Give me 1 second. Did we get that? There you go. How did you guys think October was? You think October was good? You think October was a good month? What you guys think? You know, um, again, I have access to all these years of reports. So if you have any question, or you're doing a research or something like that, I'll be more than happy to share how that market was. So let's go ahead and let's read some details here. It says, despite a recent pickup in the mortgage rates, Houston housing market maintained its momentum in October. Both sales and inventory increased, healthy and active market in the final quarter. So it'll be in the final quarter of the year. So you're gonna be hearing that. The final quarter means the last 3 months of the year. Which direction was it? A successful one, or was it down? Right. So let's read the numbers. Let's read the numbers for October, and this is 2023. This is 2024. I mean 2023. This is 2024, and we're gonna be comparing them to what it's actually, a comparison of, it's whether there has been an improvement, or not. Um, total sales. The total sales is on 2023 has been 7,829 compared to 2024. That means that October really did good. There's a change of 10%. Almost 1,000 sales compared to last year. That means that people are getting more comfortable um, on what's happening. Uh, if you stop waiting, that's good. I'm a firm believer that we should be actively looking. If you are actively thinking of buying, you should start buying. Look into it now. You know, um, I believe that there might be a pickup pretty soon, a temporary one, but that's just my prediction. I could be totally wrong, but I'm starting to see it now. Total volume. Why is this flicking? Okay. Total volume is right here. We have over 2 billion, and it went up again. It went 2 billion, 2 million, and then it went all the way 3 million, and then it's almost a 20% spike. That's 3.5 billion. Yes, I was correct. Okay. Total active listings. So everything seems to be on the uptrend compared to last year. I think last year, I think that everybody was still worried. Everybody was still didn't know what direction uh, the country was going. But everything, all the numbers, active listing means that how many people are actively has the property in the market. So that's we have 9,000. So that's 23%. Single family home sales, it's another thousand, almost 1,000 up from 6,000 to 7,000. Average family single family average sales price also went up. I mean, that's if you're a buyer, you want that number to go down. Um, but it went up. It went up 5%. Single family medium, it went up went up not as much, but it went up. What's the next? It says single family inventory. It went 3.5 months to 4.54. If you're wondering what does this mean, this is basically if no new active listing would have come in. Let's say no one wants to sell their home, right? If you starting today, no new sellers will enter the market. Everybody that is in the market will remain, but anybody that no new houses will come into the market. It will take approximately 4.4 months so to all inventory that currently is in the market to sell. Okay. Um the so the more months that it stays in the market, the more that increases, the more it becomes a buyer's market. If that number goes down, it means it's trending for it to become a seller's market. I know a few years ago when the houses were flying out the market real quick, this number reached all the way to 2 months. That's how quick properties were selling. Um, but right now we need to balance out. So we're gonna see this number. I believe it's gonna be a little bit higher for the upcoming months. Single family pending sales. That's again also trending up with more sales on the horizon, right? As we see here in October, single family poses a gain for second months in a row, climbing to 12.8% over the year. This is all good. We're seeing more sales. The market is moving, is trending to the right direction. If you're a seller, I'm guessing that you're seeing more activities in your listing. If it's not moving, remember, if you're selling, it's going to be either your marketing, it's either your location, or it's your pricing. Location, we can't really, you cannot move your house. You need to know, um, is if you're in a hot market, right? Let's say you're in a special subdivision, right? And houses sells real quick, and if you see everybody selling real quick, and if you are not selling real quick, then it has to be with your marketing or your pricing. I know that as a seller, we want top dollars, but in reality, you end up losing more. Also, if you are a buyer, this is the time to get it going. Don't wait for everybody to come in January, because this is what's going to happen in January. You know how people make New Year's resolution. Like, I don't know if you've seen on these social medias how everybody runs to the gym. Everybody goes to the gym, because they want to start the new year fresh, and the gym is packed. The gym is packed with ton of people, right? Because they make that new year resolution. And now, if you keep on waiting on getting your stuff together and starting the the buyer process, that's exactly what's going to happen to you. Comes January, there's going to be a massive amount of people looking to get pre-approved, looking to submit offers, looking to get all these things done. So you're gonna face this delay, because now your lender is probably super busy. Your agent is gonna be busy with other people that were ready for you. So if I was you, if you're thinking of buying, don't wait for the New Year's, because that's when the whole masses will start coming in. Get yourself together now. Speak with your local agent. You can call me if you want. I'll be more than happy to assist you. If you don't have somebody, I'll find somebody for you. If you that means if you out of my reach. Um, but that being said, I mean, I'm a big advocate that you should start now. But yes, these are the numbers. I think that November will be something similar, as well, as numbers keep on improving. So I'm telling you, get yourself together and you have success. Let's go for the weekly charts, right? This is basically breaking it down on the weekly scales, what is happening in the market, like that, at a week scale. So as you see right here, our new listings have been outperforming last year's. Pendings, this is properties that go on the contract. They out being, let me see, since a few months ago, it has been outperforming as well. I think that now, as we saw the other numbers in October, I think that these numbers are gonna remain on the upper side. Off markets or off market listings, this is just people that are selling their property off the market, things that you don't see, they are outperforming them as well. So it seems that the last quarter has been really good for everyone. Closings, that you see this big spike that just happened, that means that a lot more closings are happening. These are people that in October they went on the contract, and now they're closing. You know, these are people that are taking initiative. This is people that won't have to deal with the masses on January running in. Um, Believe me, I've been in the real estate for 10 years now, and everybody wants to do something in January. Everybody, that new year resolution, new start, new beginning. Yeah, your new beginning starts now. It's Wednesday. Let's make it Wednesday. Like, hey, it starts right now. As soon as this call, don't leave yet. Don't hang on in there. But yeah, let your start being proactive. Don't wait only because the new year starts, man. I'm telling you, because there's a lot of people that are thinking alike, and what we want to do, what I want to teach you is like, yes, that is a good idea to start the process, but if you could start it before, hey man, don't wait for the crowd. Believe me, don't. It's gonna get congested. So this is the closings. You see, people are being active. People are closing deals. Showings. This is people that are going and viewing. I have a few listings myself, and I'm getting more activities. As you see right here, more activities outperforming what happened last year. This is okay. This is interesting. This is 2023, 2024. Okay. Remember that the blue line is our current year. So right here, you see that how many people have visited our websites, the HAR website, and you see that it's a massively 53.8 increase, and this is how many open houses are being held. So there's people active, there's people moving, you know. So that's 10,000 people, 10,000 people that went to visit the our website. That's amazing. That's good. Okay, guys. So a lot of you, I know that there's a lot of people now that the presidency is done. Well, it's not technically completely done, but in terms to elections and in terms, all we are looking for is for them to take over the White House and make that transaction, right? But however, there's been a lot of people are saying that there's no such thing as as a effect on who's going to be leading the market. I mean, who's going to be leading us as a country. I don't know if you've been paying attention, but as soon as the results came in and Mr. Trump was elected to take possession and to lead us into the next 4 years, there was a reaction. Okay, whether you noticed it, whether you didn't, and whether you did, you know, that's fine. But there's been reaction. This is normal, right? This is how the people are gonna react to our new leaderships. Okay, it's totally fine. It could be negative and it could be good, you know. And I'm here gonna talk about a little bit of that. And let's what we got here. This is the mortgages, right? Well, let's we can do the mortgages in a bit. How to impact the president's election, and if you don't believe me, we'll run. We'll see a few points on that. Let me see. Oh, wait. Oh, here it is. Okay, this is a chart that I was able to find. I think very, 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 very detailed, especially how the S&P 500 data for the last 10 presidential years. Okay, so this is not something crazy. You could go ahead and take a look at it. And we'll start right here from 1988 when the new president of that time, I'm not going to sit here and say which one it is because I don't even remember. Was he took he took won the presidency. There was no reaction, everything stood the same. Normally that means that everybody was content on what direction the nation was going. 1992, you could also see the same. I think that we were just riding the wave. Again, everybody was happy. To 1996, things got a little bit higher. This is the point. The market did not really respond to it, but it did. I mean, it did a little bit. It went up to 150 points, right? 2004, that's when things start reacting. You see the brown line right here. Okay. All right. And was 2000 was 2008. 2008 was drastic. Look, the green stars right here. We start off good. So there's like, and then it drops. It drops as massive drop. But don't worry. I don't know if you guys remember 2008 was the crisis of the financial crisis. Um, it was really hectic that time. And the market responded. Whether it didn't care. It didn't care who was the president, right? It was just it was cruel, right? But in 2012, we was able to come back from that, get it more stable. We got some gains on it, and we was good. And then after that, as well, there was a drop. What I'm trying to get here, that people that don't feel that there's no reaction on whoever's leadership, it's not true. I believe that before our election was over, there was tense. People did not had no sense of direction. They didn't feel security. And if you did, that's great. You because that only means that you know where you're standing and you know what direction things are gonna be. But there's a lot of people that did not know, whether it was Harris that won, whether it was Trump that won, the market was gonna respond. Maybe if Harris's would have won, our reaction would have been even better, you know. But we wouldn't know that, or it could have been the opposite, at the end of the day, we gotta remind ourselves that these two candidates are want the same thing. They just see it differently, and sometimes that differences is how the market will respond. Now remember, guys, I'm not here to convince you of your party or anything like that. I'm just here to show you that data. Okay, and then 2016, this is the black line. You could see that it led into a positive, right? You see the market reacting in a positive way. In 2020, yes, remember that big dip, but then we were able to come back. Now look at 2020. Look at the reaction. 2024. I'm sorry. Look at the reaction that this is going. This is like really, really crazy, right? Now, yes, I know it's only up to September, but let's see where it ends up. But overall, I believe that it should be continue going on the upside. But yes, most definitely, we could say that the presidential election, now that it's over, I think that a lot of people are now more at ease, whether you like it or not. I think that we got that passed, and we just stick with our results and go forward. This the confidence of Trump's victory sparks a consumer confidence surge. This is real. This is real. People are now going out and doing what they do, going purchasing things. They feel confident. And I'm gonna tell you why, because everybody feels that now, one, elections are done. Two, we're gonna have the same president that we had 4 years ago, when the economy was better, when we was able to purchase, when gas was down, when things were more affordable. So now the mental state of mind is like, oh great, we're gonna get that back again. Now that might be the goal, but in my perspective is that we're not gonna get there as quick as we did last year, and you won't be able to repeat the same thing again. And I'm not saying that it's gonna be a bad year or it's gonna be 4 bad years. It's just don't expect the same results, because we're in a different situation that we were 4 years ago. So just keep that in mind. I was always prepared. um, be saving, look for investments, look the way to do things and improve yourself, mentally, your wealth, your family. Always be in the look like, never get complacent, because that's when things go bad. Okay, but I'm not preaching here. This is what the people are reacting to. Why does it matter? Political drive consumers, sentimental, no longer near on useful economy indicators, right? The big picture here, let's see some of the points. Overall sentiment hits 100.9 in November 11, according to the morning consult consumers. This is anything over 100 is positive. That's crazy. Heading into the election, Republicans was negative around 8. That's what I'm saying. Everybody was really scared. They didn't know where to go, as it has been essentially since Biden entered the White House. It spiked to 107 the day after Trump won. Okay. Democrat sentiment fell at the same time, but the drop was mild comparison to the over index still turned upbeat. That's what I'm saying. I think that everybody everybody was up to here when it came to this event, right? Everybody was just like, let's just get it over with and let's move on, and how we're gonna improve this. So that's good. Pretty clear was a big it's pretty clear politics was a big part, said Ben, vice president director of the economy. Yes, I think this was a big reason why everybody was stalling the economy, how it seems. I know that if you have stocks, if you have crypto, or if you have any of those holdings, you probably saw a big spike on that. But don't worry, now is the chance for you to get yourself going, and make something happen. Take advantage of now. And don't worry, tomorrow already passed. The future is too far. You live in the present. All right. So, guys, I hope this was useful. Take advantage. If you have any questions, I'll be more than happy to answer. Drop it on the comments below. I'm here for you. Let me see if there's anything before I log out. Okay. Till next time, guys. That is all. Have a blessed day, and love your neighbor and love your family.